Bloomberg podcast, and that's where you will find us. Let's check in with our next guest here, because what a lot of folks are trying to do is figure out how to reposition their investment outlook, their portfolio for a second term of President-elect Trump. Any changes that need to be made, people are trying to think about those right now. Peter Andersen is one of those folks, founder and chief investment officer for Andersen Capital Management, joining us from Boston, Mass via Zoom. So, Peter, we're almost a month removed from the election. We now have a Republican White House and a Republican Senate and Congress, by thin margins, yes, but still there. Given that backdrop, have you and your team made any changes to your outlook for investing?
Normally, this would be kind of a textbook exercise, but with the nature of President Trump, it's very, very difficult to make any kind of projections. And, you know, he's thrown several monkey wrenches into the works now. There's certainly the tariff situation has everybody running and scrambling to analyze how this is going to work out. So I would say the past playbooks, you really have to throw them out, and you have to look at something totally different, which is the dynamics of tariffs. How is that going to influence potentially higher interest rates, items like that. So we are looking, but I will tell you, it's almost a fool's errand to try to work through all that and come out on the other end of that analysis with a highly confident outlook based on what the president is going to do.
So, all right, there's a high level of uncertainty out there. We've heard that from a lot of market participants as well. Given that, where are you guys today? Stocks, bonds, value, growth? How do you position right now?
Well, I just run a single strategy, and it's a growth strategy, equities. It's an all-cap strategy. So what we're doing is we're looking at the current holdings, and we're asking ourselves, how vulnerable are they to policy changes? And if there are stocks, in our opinion, that are more vulnerable to the uncertainties of those policy changes, we would probably look at selling. However, we've reviewed the entire portfolio, and in our opinion, all these stocks that we hold, which are under 15, in fact, are fairly invulnerable to tariffs, to interest rate changes, things of that matter.
How much of that is going to be, say, AI and big cap tech?
A lot of big cap tech. Also, I was a big enthusiast of artificial intelligence, namely NVIDIA and Supermicro and some of the others. But we're thinking now that the enthusiasm is a little bit overspent, and anticipations of how much AI is going to actually accomplish and contribute to the bottom line, we think is vastly, vastly exaggerated. And so we have trimmed those exposures dramatically coming into the next year.
Peter, how many stocks do you own in your portfolio today, roughly? And is that in line or a little bit different than past strategies?
Well, actually, exactly 13 stocks.
Wow.
So it's fairly concentrated. I don't think you'll find another manager out there that runs a concentrated portfolio of that few numbers of stocks. So you can imagine that it takes great confidence in the holdings and understanding each one. And certainly now with the change in administration, it actually puts more of an emphasis on that and to try to play out what we think is going to happen. So for instance, you mentioned artificial intelligence, but cybersecurity is a major exposure in the portfolio. And we think that regardless of who is in the administration or where interest rates are going, or if we have 100% tariffs, as have been mentioned recently in certain countries, we don't think cybersecurity would be impacted by that. It just makes common sense to us.
13 stocks. What's your average holding period? I would think once a stock gets in your portfolio, it's not going anywhere.
That is true. You know, the turnover is under 30% averaging over the past 10 years. And we really do spend a great deal of time looking at these stocks and, you know, we sometimes get criticism, well, you know, it's so concentrated. What about your competitors? Your competitors own anywhere from, let's say, 50 to 100 stocks. And we challenge them on understanding those holdings in as much detail as, say, a portfolio of under 20 stocks.
So do you, when you talk about the AI trade, like when you said that you think that it's an over-promising, well, I'm paraphrasing here, but the expectations are just too high. What do you mean by that? Is it just that it's not going to be this big revolutionary thing, or that money eventually will stop being spent on it? Can you dissect that a little bit more for me?
Of course, and thank you for asking, because I really do think this is a neglected point that investors really have to spend some time on. So I think investors have gotten a little bit over their skis in thinking that AI is going to be the cure-all of everything. And one thing I can just mention to you is if they think that it's going to emulate human thought, the brain is about the size of two fists. Look at the real estate of ChatGPT, for instance. I mean, it's enormous. And now we're thinking of dedicating nuclear power plants to powering these things when the human brain works on a refrigerator light bulb wattage, you know, under 10 watts. So we're going down the wrong path, we think, in terms of formulating artificial intelligence and making it human-like. We think that that's at least 10 or 15 Nobel Prizes away, and investors have not caught on to that concept yet, nor have certain CEOs. They continue to spend enormous amounts of money, and when you ask them what the rationale is, they say, well, because our competitors are spending just as much money.
All right, Peter, thank you so much for joining us. Always a pleasure chatting with you. Peter Andersen, he's a founder and chief investment officer of Andersen Capital Management up there in the Boston area.